We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart. And as a price action trader, I need to identify first what is the directional bias of the market. And right now it is bullish. So I need to find the correct key entry point, the right channel. And I can see that we have spike and a channel alternative, the bullish pattern. There were a couple nice hyper relative setups, but this was way before the stock market opened. I'm just going to be waiting for the correction to the EMA, and I'm going to see how the EMA reacts. Alright, traders, I'm resuming the video as the structure reversed into another spike and a channel. You can see first tight leg, very steep and tight. Secondary leg is much flatter. We broke the channel, and since EMA keeps rejecting, according to channel rule, we expect for price action to create new extreme. We had a second entry short, which is our chance to enter to capitalize on getting the new low. New low, first break over here, pull back, second break over here. But as you can see, my signal bar wasn't bearish. It was doji with bullish body and still above the EMA. So unfortunately, I didn't feel comfortable really selling just yet. I want to see nice bearish rejection. And by the time you get this big bearish bar, the stop loss would be just way too big. And you can see I just couldn't have entered, unfortunately. But this is how price action works. This is what I'm looking for. We have an uptrend, second entry long, couple hyper relative setups on the way up. Now we have a downtrend, second entry short, hyper relative setups on the way down. We created a new extreme, so I'm going to mark the new low right now. If we're going to continue working lower, this is where I'm going to adapt, looking for wider channel. But right now we have a break and a new extreme. The downtrend has a break. We're pushing below EMA, so I'm expecting some failed second entry long bullish trap below EMA to retest the new low for this downtrend. We're pushing quite far down. We haven't even made first entry long failure, so we'll see if we can even get it. Alright, traders, I'm resuming the video as I entered a high-low confirmation setup of the failed breakout. The downtrend, the spike in the channel, played out with the break, two legs to new extreme, and while we were expecting the new low, the consolidation formed, the trend range formed. We have two-leg up pullback down. We have a failed breakout, but since we had bearish bias, I wasn't interested in going long just yet. But now we have high-low confirmation setup of this failed breakout, and we still have room to pull back the exponential moving average. So chances are really high that we're gonna snap back, at least create a failed breakout back into the trend range. So this is my thesis. This is what I'm betting on, simply because we have two-leg up pullback to new extreme of the downtrend, first leg down, break, second leg down. You can see a flat EMA, consistent price swings up and down. So we have small trend range. Most breakouts will fail, and this right here is a failed breakout. I waited for high-low confirmation setup. The signal bar is good, and hopefully we will get the 2-point scalp. I'm going for 2 points and even one contract as a runner. We're bouncing on my exit order, but we need to tick through. Come on. And we got failed. So I'm going to place my stop loss to break even, because anything we make right now is going to be just a bonus. A lot of times when you're buying the failed breakout, there's a chance of catching quite substantial move, but this was not particularly healthy trading range because we traded down into it. For this reason, I skipped the first failed breakout. I wanted to wait for the high low, but you can see broad two legs down. At the bottom of the trend range, buyers are coming to the market, so I decided to take it for a quick little scalp, leaving one contract as a runner in case market surprises me and we're going to go back all the way up. Shortly after my high low, there was even a failed second entry short, new low, first entry short pullback, second entry short failure. But most breakouts out of trend ranges will fail, so you can see we're not looking to take a second entry short. We have break a new low for the downtrend. This means this spike and channel played out, and once you see this channel having a new extreme, you have to pause looking to sell. You expect correction or reversal. And because this was not just a downtrend, this was downtrend into consolidation, brand new market cycle, the chances are higher that it's going to be reversal, because it's going to combine the fact that you also have failed breakout at the bottom of the trend range. So there was also a failed second entry short with nice signal bar. You had the right little pullback, but your stop loss goes one tick below the signal bar, and eventually market continue working higher. I trailed the runner one tick below this signal bar, and we just got stopped out. Price action created another low that is lower than the previous one, so this tells me that the bias is prevailing bearish. Sellers are stepped into the market, so I'm not really buying anymore at the bottom of the trend range because we keep slowly but surely breaking lower. But this is so sideways, such a long trend range, that I'm not really comfortable selling. So when I'm not sure, I'm just being patient. Alright traders, I'm resuming the video as we have high-low confirmation setup of the second entry long. EMA rejected once, downtrend has a break, attempt to create new low, but I'm afraid that this bar is closing way too big for me to enter, and it looks like I may not be able to enter this because we are closing way too far up to these highs, and the risk is just going to be substantial for me. Let's see. I will skip it because it closed way too far up, way too big, and I need to form a little bit closer so I have room to get out before creating the new extreme. I'm gonna wrap it up with my one single trade. Price session rules allow us to stay on the right side of the market. The perfect example is the beginning of today's session where we have clear strong uptrend. We're breaking the channel and we still expect new high to be tested. This is the new high. First break higher, pullback, second entry long, textbook signal bar at the key entry point EMA, shortly after high low double bar entry form, and even pretty tempting failed second entry short. But you have to be a little bit careful because you already created the new high. Now the double top will trap a lot of sellers, but still after you create a new extreme, it is a little bit more advanced. I have a spike in the channel drawn, which fits fairly well. And every single time you're confused, okay, are we going to reverse? Are we going to get new high? Just observe the EMA. Here after I saw that the price action completely pushed through the EMA without any resistance, this tells you, okay, this is more than just a tiny correction. And especially after you see spike and a channel developing, notice we ended up correcting all the way to the beginning of the spike and the channel. So at this point, we retraced too much and we are respecting the spike and the channel. We had a second entry short, which is once again the price action setup you're expecting, just like second entry long. We expect second entry short to get a new low, uptrend played out to break new high, but the signal bar is bad above EMA and you have a new extreme, but price action kept getting rejected by the EMA here and again. So this tells me that I have, okay, first leg down, second leg down, third leg down, and I have continuous EMA rejections, which means, okay, I'm going to redraw a little bit wider spike in a channel. This keeps me thinking bearish. However, we didn't really get good setup because you expect some nice failed second entry long below EMA, that didn't happen. Then you have push above EMA, kind of like a no trade area here. You have a lower high, which you expect new low for this channel, but this lower high is not really confirming much, and more importantly, there was no bullish bar in between. It's too steep. So for this reason, it is more aggressive. Had there been a nice bullish bar that bulls can get trapped, you could have considered, but not that many bulls are going to go long above this bearish bar. And then market created a new extreme and a brand new market cycle happened. So always zoom out. What is the main pattern? Is this a trending market? You have to ask yourself, no, this is not. You have move up, move down, flat EMA. This is big trend range, and right now we are in a small trend range because EMA has been consistently flat. We have a lot of consistent price swings up and down, and after breaking new extreme, we expect correction reversal. Most likely reversal because we're going to combine it with the trend range structure. Okay, there's a chance for you to draw a wider downtrend like this because this bounce down is quite tempting, but this structure is not particularly trending market. And this sideways structure is too long, too sideways. It really represents a trend range much better. So when it is too sideways, you know, downtrend should be a series of lower highs, lower lows. You can see you have low here and you have high low. Too much sideways area. This is not really how downtrend is supposed to be developed. For this reason, I'm sticking mainly to trend range structure. Also, this high and this high is higher. So follow the trend range cycle. Most breakouts will fail. I waited for the high-low confirmation setup, and shortly after you have a new low, first entry short, push above EMA, push above the support, and a failed second entry short. Great single bar, high probability setup. Support keeps holding. The buyers are buying at the bottom of the trend range according to range rules. And you have a new low, first entry short, but this is too congested, lower high, unclear bias. But once you push above EMA and you get the failed second entry short, that's the ultimate trap. This tells you that you can start trusting the bulls again. You're above EMA, but my signal bar is bearish. You cannot buy above bearish bar like this. If you have bullish bar here, failed second entry short, you can consider. Then we have second entry long, but the downtrend is still in play, horrible bar. And then you have failed second entry long, but it's above EMA, so you definitely cannot sell, especially if you can see continuous EMA rejections. In fact, once it turns bullish and forms high low, now it's confirming the second entry long, double rejection at the EMA, great bullish bar. You need to use limit order, however, because you don't have enough room to get up before these highs, so you need to wait for break above the bar, trap your limit order. While the channel was established, now we have new high, first entry long, pullback, second entry long. And this is double trap, and also a visual two-leg pullback, and not only that, it is a small failed breakout out of this small congestion. and you're at 2 key entry points, not 1 but 2, and for this reason you can disregard the tiny overshoot. If this was legitimate second entry long, you probably skip it because you have overshoot, but since this is a confirmation setup, the double trap and also fell break out of the congestion, this is a great hyper this setup, 2 key entry points. Now I refresh my data. Back when I was watching this, after I came back from my break, there was a better bar with more of a bullish stem, so this single bar is not the best, but when you're watching this live, you have much better bar and perfect price action break, new extreme. Now you have micro double top, which forces you to reset the count, so you have only first entry long, count reset, first entry long, so you never really get the good second entry long to enter, new high, and now the market close. So this is the overall market structure. A couple of good setups on the way up here. This was really the area where you can start getting some good setups. These two down here, good setups on the way up. Unfortunately, I was right about to take my break here, and I was on my break here, so I was a little bit patient to take this setup because I don't really like taking aggressive setups right when I'm about to take a break. But these are a couple of good setups on the way up, and overall decent price session day. Today was rollover date, so make sure to roll over to December contract. I'm gonna wrap it up, and I'm gonna talk to you next time. Good luck with your trading.